Hello traders, you are welcome back to the Forex Geek channel. If you are looking to dive deeper into volume indicators and how they can improve your trading strategy, then you are in the right place. In this video, we are comparing three powerful indicators that are essential for any trader, and those are the unbalanced volume, the money flow index, and the accumulation distribution indicator. Now, these three indicators each have their own unique calculation and function, but when used correctly, they can give you a clearer picture of the market's momentum and direction. I'm just going to be adding the three indicators to the chart right now. So this is the unbalanced volume, this is the accumulation distribution, and this is the money flow index. All right. Whether you are trading stocks, forex, or cryptocurrencies, understanding these volume-based indicators is key to boosting your analysis. In this video, we'll break down how each one works, their differences, and when to use them. So let us get started. Let's kick things off with the unbalanced volume, or the OBV. This is one of the most popular volume indicators used by traders to track the flow of money in the market. Right? What is the OBV? Unbalanced volume is a simple yet effective tool that combines price movement and volume to gauge the strength of a trend. Now, the concept behind OBV is straightforward. If the price closes higher than the previous close, the volume is added to the OBV, indicating buying pressure. But if the price closes lower, the volume is subtracted, showing selling pressure. The idea is that volume precedes price. In other words, volume typically leads price movements. The rising OBV suggests that buying volume is increasing, supporting an uptrend. A falling OBV suggests that selling volume is increasing, signaling a potential downtrend. So when do you use OBV? You use OBV when you want to confirm the trend or potential price reversal. It's particularly useful for spotting divergence between the price and volume. If the price is making new highs, but the OBV is flat or declining, this could be a sign that the trend is losing steam. The same applies in reverse for down trends. All right. Next up, let's talk about the money flow index. The MFI is a momentum indicator that measures the flow of money into and out of an asset. Unlike OBV, which uses volume and price to determine buying or selling pressure, the MFI combines So the MFI combines price, volume, and momentum to assess whether an asset is overbought or oversold. Okay, it is calculated by multiplying the typical price, which is the average of the high, low, and close, by volume for each period. Okay, so the result is then used to create an index that ranges from 0 to 100. A reading above 80 suggests that the asset is overbought, while a reading below 20 indicates that the asset is oversold. So when do you use the MFI? The MFI is particularly effective for identifying overbought or oversold conditions. It is a great tool when combined with other indicators to help spot price reversals. For example, if an asset is showing overbought conditions with a reading above 80, but the price continues to rise, it may signal that the market is in a bubble. If it falls below 20, it could indicate that the price is oversold and might be due for a bounce. Okay, now let us move on to the accumulation distribution indicator. Now, the accumulation distribution indicator line measures the cumulative flow of money into and out of an asset using both price and volume. Unlike the OBV, which simply adds or subtracts volume based on price movement, the AD takes into account the closing price relative to the range for each period. This means it is more precise in identifying whether the closing price reflects buying or selling pressure. Now, if the close is near the high of the range, it suggests buying pressure and volume is added to the AD line. If the close is near the low of the range, it suggests selling pressure and volume is subtracted. If the close is in the middle, no volume is added or subtracted. So when do you use the AD? AD is most useful when you want to assess the overall buying and selling pressure over time. It can also be used to confirm trends or signal reversals. Similar to OBV, if the price is making new highs but the AD line is failing to follow suit, it could signal weakening buying pressure. All right, so it's important to take note of those discrepancies. Conversely, if the price is making new lows and you notice that the AD is rising, okay, let's just see if we can find that example. All right, okay, I think okay, it's not exactly the same, but let's see. Let's see if we can find such an example. All right, we can see that here we had the price making new lows, and we can see the AD making, lower lows in the price and higher lows on the AD. So it was showing that the bearish momentum was already getting weak. Okay, so in that case, you just want to be looking for a bullish reversal, and you can see that we actually had a bullish reversal. All right, so now that we've covered what each of these indicators does, let's compare them to understand their unique features and applications. Okay, now the unbalanced volume is great for confirming trends. It's a simple tool that tracks whether buying or selling pressure is driving the market. However, it does not provide overbought or oversold signals. Okay, the money flow index, on the other hand, combines price, volume, and momentum. It is perfect for identifying overbought and oversold conditions, which makes it useful for spotting potential price reversals. However, unlike the OBV, it does not directly track the flow of money into or out of the market. All right, that's the MFI. Okay, the MFI combines price volume. This is the OBV, the unbalanced volume. This is the accumulation distribution, and this is the money flow index. All right, so the money flow index combines price, volume, and momentum, and it is perfect for identifying overbought and oversold condition. You can see the 80 level here and the 20 level, whereas the accumulation distribution is more sophisticated than the OBV and the MFI, because the AD considers the closing price relative to the range, making it more precise. Okay, the AD is ideal for confirming whether buying or selling pressure is dominating, but it may not always give clear overbought or oversold signals like the MFI. Okay, so each indicator has its strengths, and the key is knowing when and how to use them. For example, you might use OBV to confirm the overall trend. You might use the MFI to spot overbought or oversold conditions, and the AD to assess the flow of money and buying and selling pressure over time. Okay, so there you have it, a comprehensive or comparison of the unbalanced volume, the money flow index, and accumulation distribution. All three of these indicators provide unique insights into the market and can significantly enhance your technical analysis. Remember, there is no one size fits all when it comes to indicators. It's all about combining the right tools to suit your trading style. All right. Whether you are using OBV, to confirm trends, or the MFI to spot overbought, oversold conditions, or the AD to gauge buying and selling pressure, these indicators will give you a deeper understanding of market movement. If you find this video helpful, make sure to like and subscribe to the channel for more in-depth trading tutorials and technical analysis tips. Don't forget to hit that bell icon so you are notified whenever we upload a new video. Let me know in the comments which indicator you use the most, or if you have any questions. Thank you for watching and happy trading.